Thank you for watching the third edition of the Goodwin Financial Services Market Preview. And this is the third year after 2022 and 2023. Let's just recap on what we thought would happen in those 2 years, and then I will give you my predictions as to what I expect to happen in 2024. Well, in 2022, we were on a downward trend there, where with all the chaos that was in the Ukraine, inflation, and we had a year of 2022 that was exceptional and hopefully will not be repeated again. Everything fell into free fall. It wasn't a recession, it was the market, the energy, inflation and everything else. What we were able to do though was pinpoint the bottom of the market. Back in January 22, I said I felt that the market would bottom on the 30th of September that year, and within 3 days we were pretty much spot on. So we got that right. And then last year I told you that I fully expected markets to perform well in 2023, and as such they did. I referred to the American market as being pivotal in that. The American market, if you were 100% exposed to equities, returned around 25%, far ahead of the UK market at 3%. But it was once again a correct prediction about where markets were going. So the big question is what is going to happen in 2024. Now, obviously, the assumptions that I make are based on what I believe is going to happen. We don't know what's going to happen around the world. We've got the problems in the Red Sea, and there are obviously little pivotal points and issues that can affect what I believe will happen. But history really tells me what I believe will happen this year, and we use historical statistics rather than current macro situations around the world to actually pinpoint what we believe is going to happen. So, what do I believe in 2024? Well, I believe that we're going to see a positive return in investments and markets. Now, let's look, and I always go back to the 4-year American cycle. And the American presidential term has 4 years. Obviously, the inaugural year, year 1, midterm year 2, then year 3 and year 4. And last year I told you that in year 3 of an American presidency, markets went up nearly every year in the last 100 years, apart from 1939, where it fell by 0.1%. So pretty much it's pretty certain that in the third year of an American presidency, markets will rise. So using the same data, which is what I use year on year, what happens in year 4 of an American presidency? Well, on 82% of occasions, the market rises. But what's pivotal to this is if you have a falling year in year 2, like we have had, then results tell you that 100% of the time historically in year 4 of that, the American markets will rise. And I see no reason that won't continue. Markets last year recovered really from the 2022 debacle, but they haven't. There's still room for them to surge forward. We can argue about inflation and interest rates, which I'm going to discuss separately here. But in light of the macro, which we can never be sure of what's going to happen with inflation and interest rates, although I believe that barring disasters in the sea and with Iran, they're going to continue to fall, we are in a good economic perspective because markets perform better when interest rates and inflation falls. So bearing in mind that is my belief, and history brings us back to that, I do believe that markets will perform upwards. It's obviously important when you are looking at markets generally. It's not a case that everything goes upwards. You need to make sure that you're in the right funds and investments to take the benefit of what's going to happen this year. Now, just a bit of an interesting statistic as to how good or bad this year could be. I want to refer to another statistic. Bearing in mind that the American elections are in November, you have a perception that's not true, that markets perform better under Republicans rather than Democrats. And you have the same argument in the UK, markets perform better under Conservatives than Labour. But let's just deal with the Republican-Democrat because the principle is the same. If it looks like Trump is getting into power in November, markets will react emotionally and favourably to that. And if I believe the markets are going to rise this year, they will rise even more if it is Trump that they believe will get into power. But then what happens in the first year of an American presidency, which would be 2025, if Trump is elected, I would then expect the markets to fall because they will go up too much this year. If Biden is re-elected in November, then markets won't rise as much this year as they would under Trump, but I would then expect 2025, the American markets, to continue to rise. So a lot about how much or how good or bad the year is obviously depends on external factors, world factors, inflation, interest rates, and wars in the Middle East. But my general consensus of opinion is we are in for a good year this year. I would also just refer back to the returns that I gave you from last year, and you see that the UK is lagging behind. And you had the economists now are saying that the UK is not in a good place, etc., etc., etc. But that is all factored into the prices, and I do believe that the FTSE is artificially low, and I do feel that there is a lot of margin in the FTSE in the UK market because it's not been in favour. And when you have something that's not in favour, it means it is not overpriced. And if you have an asset that is not overpriced and you selectively pick well in the UK market, there could be some very good opportunities in the UK market as well. Inflation has been a big bugbear for the last couple of years, as we've seen inflation rise from 2022 through to 2023. But I predicted last year that inflation would halve. I did tell everybody that the Rishi Sunak promise was a falsehood. It was going to happen anyway, and it was pretty much as I expected. So where do we expect inflation to fall? Now let me deal with one thing which is very important, and it's never reported, especially when the Labour Party are announcing or going against the Conservative Party. The way that we calculate inflation in the UK is different than the way that America calculates its inflation, and also many other countries. I won't go into detail here about how we do it, but what it basically means is our inflation figure will always be higher because of the way we calculate it. So when somebody says our inflation level is not as low as America's, it is basically because we don't calculate it in the same way. So in reality, our inflation is not as bad as it appears to be, because the way that they do it does not favour the lower figures. So from that point of view, where are we sitting with inflation in the UK? Well, my belief is, and I will say that I made this prediction prior to this problem with the Houthis and the Red Sea, was that inflation would be very low in the UK by the time we get to June, well below the 2% guideline for the Bank of England. So I believe that it is still heading there. And this is because of data that I've given to you before about the oil price being much lower than it was a year ago, about the container, which I said before, about the cost of containers that have been lower than they were pre-COVID, of shipping containers around the world. And all of this has an impact, but it's a delayed impact into inflation. So I believe that inflation is going to really fall fast. Now, obviously, the Houthis and the Red Sea, at the moment we've got a temporary rise in the price of oil and the rise in container ships, but that's because of what's going on. Hopefully that will be suppressed fairly soon, and these ships will be able to sail without any problems. And we've already seen some of the terror groups saying they will not attack America anymore. So hopefully that's going to be the case, and that can be resolved, and then we can head on down to a south-based inflation. And obviously if we get inflation down to that level, that is normally favourable for assets such as stocks, and also favourable for assets such as bonds and fixed interest funds, which are also helped by lower inflation. So my prediction with inflation is that inflation will fall, and inflation will be much lower than it is currently, and I think we will be heading to sub 2% fairly sharpishly, barring some form of. Let us look at interest rates. Now, I believe that the Bank of England last year made serious errors by pushing rates up far in excess of what needed to be to control inflation. I felt that inflation was falling anyway, and we did not need to suppress people with debts and mortgages to the rates that they have had to go, where rates were over 6%. Because in effect, with the tax rises that the government have made on our earnings, no tax thresholds rising, we were being taxed indirectly there anyway, and they were drawing money out of the economy in that direction. So there are two ways governments could take money out of the economy. One is by not stealth taxes, not increasing tax allowances and everything like that. So, and also secondly, by interest rates. And I feel it was overkilled. So this year, I think you're going to see that the Bank of England they're not likely to drop interest rates in January, but I think you'll start to get the rhetoric of interest rates likely to fall. In America, they were pricing in 7 rate cuts this year, although that has been reduced to 5 recently, primarily because of what's been going on in the Red Sea, but they're expected to see quite big rate cuts in America this year, and I'm expecting to see good levels of rate cuts this year. I could see quite comfortably rates coming down by 2% this year, interest rates, and possibly lower again in 25. So a lot of this relates to people with mortgages. They have to make the right decisions as to what types of mortgages to have. Of course, and I will put the caveat, of course we've got the risks of the macro world, of things going on in the Middle East, etc., etc. But I do see that interest rates are going to move south. Nationwide Building Society have recently announced massive rate reductions and are very, very competitive, offering very good interest rates, both short-term, long-term. Others are even offering better terms than them in certain circumstances. But my belief is that though if you've sorted out your mortgage rates correctly, you should be able to benefit from that in the latter part of 24 and 25. So my overview is I'm believing that inflation is going to fall, interest rates are going to come down, and that markets are going to rise. Of course, you need advice to make the specific right decisions, to be in the right funds for this particular timescale period. And what you're investing in this year may actually be different to next year, bearing in mind what I've spoken to before. Let's hope these predictions are successful as ours were in 2022 and 2023. Obviously, we are available at Goodwin Financial Services for anybody that does want to speak to us or have individual advice. Thank you very much for watching, and I hope you found it worthwhile.